All right, so get ready, everyone, because today we're diving headfirst into this whole danger zone thing that's been plastered all over the financial news.
Yeah, danger zone. It's certainly a catchy phrase.
It definitely grabs your attention, right? Like, wait a minute, what's going on? And you shared some really interesting stuff with me. A mix of market summaries and geopolitical news, even some expert predictions.
Yeah, and it's interesting, right? It's not just the usual, market dip. It feels like there's this underlying current of uncertainty. A lot of it's driven by what's happening globally and how that's playing out in the economic indicators.
Totally. It feels different this time. This is a good way to put it.
Yeah.
So let's start with the nuts and bolts. What are the markets actually doing? I'm talking S&P 500, Dow Jones, Nasdaq, Russell 2000, the whole picture.
Right. Yeah. Yesterday was a bit of a rough day across the board.
Oh, really?
Yeah, we saw the S&P 500 close down 0.5%. That put it at 5,868 points. And then, the Dow Jones wasn't too far behind. It dipped 0.6% to end the day at 42,392. And the Nasdaq, well, that took a slightly bigger hit, down 0.63%, closing at 19,280. And even the Russell 2000, which tracks small-cap companies, that fell just under 0.5% to close at 2,231.
Okay, so yeah, pretty much everything's down then.
Yeah.
But, with all this talk about danger zones and everything, our sources also mentioned some interesting movement in the crypto world, which I thought was kind of interesting.
Oh, absolutely. That's one of the things that kind of stood out to me, too. You had Bitcoin, seeing a moderate decline.
Yeah.
But then on the other hand, you have Ethereum actually gaining almost 0.5%.
Really?
Yeah. It really goes to show you that even in a broader market downturn, you can still find these little pockets of opportunity, sectors or specific assets that are showing some resilience. Mm-hmm.
Oh, for sure. Definitely something to watch. Okay, so that's a good takeaway for anyone listening who's crypto curious. Keep an eye on Ethereum. But let's circle back to this whole danger zone thing for a minute. Is this just clickbait? Are analysts genuinely concerned about this, or is it just to get us all riled up and watching the news?
Yeah, I'd say it's a bit of both, honestly. I mean, danger zone, it sounds kind of dramatic.
Yeah.
Like something out of a movie.
Yeah.
But there's definitely a heightened sense of concern among analysts about just the general level of market volatility that we're seeing.
Yeah.
Now, volatility itself doesn't mean a crash is about to happen. It's not like that. But it does mean, there's a greater chance for things to fluctuate, and maybe in ways that are a little bit harder to predict.
Oh, for sure. Okay, so it's not just a catchy headline then.
Right.
There's actually some substance to it. But what's causing all this shakiness? What's at the root of all this anxiety in the markets?
Well, it's never just one thing,
right?
It's like a whole bunch of different factors kind of converging at the same time.
Mm-hmm.
So you've got your economic indicators, right? We're seeing fluctuations in Treasury yields,
Mm-hmm.
which are being driven by a lot of the uncertainty in the manufacturing sector. And then you layer on top of that all of the geopolitical tensions and events that are happening around the world. We've got the trade wars, political instability in certain regions. All of that combines to make things feel very uncertain.
Yeah, it's like a recipe for volatility, like you said. Right. All these different ingredients. Okay, so I see how all of these different pieces fit together. But what does this actually mean for, the average person listening? Someone who's checking their portfolio, seeing these headlines and wondering, okay, what do I do?
Yeah, that's the question, right? Volatility can feel scary. There's no doubt about it. It's really easy to get caught up in that, fear-driven decision-making.
Right.
But it's really important to step back and remember that understanding what's causing these market movements, why are things going up and down, that's crucial for making informed decisions. It's not about panicking. It's about, using the information you have to make smart choices.
Totally. Yeah, it's don't just react, right?
Yeah.
Think about it.
Yeah.
Absolutely. So speaking of potentially game-changing decisions, our sources also mentioned some interesting stuff happening with U.S. Steel. What's the story there?
Yeah, this is a great example of how what happens with one company can give us insights into bigger economic trends. There are reports that President Biden might block Nippon Steel from acquiring U.S. Steel.
And this is a big deal, right? Why?
Yeah. I mean, for U.S. Steel, it's huge, right?
Yeah.
If this acquisition falls through, they're going to have to find other ways to stay competitive. It could be a really tough road for them. But if we zoom out a little bit, you can see that this situation could be a sign of a broader shift towards protectionism in the U.S. You know, this idea of wanting to protect domestic industries from foreign competition. And that could have ripple effects throughout global markets.
So it's kind of like a test case, in a way.
Yeah, exactly. Like, is this a one-off thing, or is it a signal of a bigger change in policy? We'll have to wait and see.
Right. And what could that mean for, like, the steel industry as a whole? What's the bigger picture implication here?
Well, it's hard to say for sure what will happen, but if this deal is blocked, it could mean that the U.S. is taking a more cautious approach to international trade and investment, and that could have a big impact on the steel industry, everything from pricing to production. And it might even spill over into other sectors.
So we've got overall market anxieties, potential protectionist moves. Are there any bright spots in all of this?
I mean, there are always opportunities out there.
Right.
It's just a matter of finding them.
Okay, good point. What about the tech sector? What are we seeing there? Because I know our sources mentioned that the Nasdaq, it's been struggling lately.
Right. Yeah, the Nasdaq has definitely been taking a hit. But there's this really interesting thing that's been circulating. It's like this trading map for the Nasdaq Futures. It's specifically highlighting some key price levels for the March contract.
A trading map. Okay, break that down for me. What does that even mean, and why should anyone care about it?
Okay, so basically this map, it's like a visual representation of where the price of Nasdaq futures could potentially go.
Okay.
It identifies these key levels, support and resistance levels, which can be super valuable if you're trying to make, smart trading decisions.
So even in a volatile market, where things are kind of all over the place, there are still opportunities to be found. But it sounds like you need to know what you're doing to really take advantage of them.
That's right. Volatility creates both risks and rewards, right? So if you can analyze the trends, understand the indicators, really do your homework, you might be able to capitalize on some of these price swings.
It's like knowing the secret paths through a maze. You can avoid the dead ends and get to the goal faster.
Yeah, that's a great way to put it. And this idea of navigating a complex landscape, it applies to more than just tech. It's the whole market, right? We have to remember that all of these sectors, energy, finance, global markets, they're all connected.
Yeah, it's like a giant web, right? One little tug over here, and you see the effects way over there.
Exactly. Oil prices impact inflation. Inflation affects interest rates.
Right.
And then those interest rates influence lending and investment decisions. It's all one big interconnected system.
Wow. Yeah, it really highlights just how important it is to understand those connections, not just what's happening in one little corner of the market.
Absolutely. The more you understand about how all these pieces fit together, the better you're going to be at navigating those market shifts and making, good decisions for yourself. It's all about developing that systems thinking approach to investing.
Systems thinking. I like that. So it's not enough to just focus on your little piece of the puzzle. You need to see the whole board to make the best move.
That's it. Think of it like this. If you're only looking at one piece of a puzzle, it's pretty hard to tell what the whole picture is supposed to be.
Right.
But when you start putting those pieces together, you start to get a much clearer understanding of the image. That's what systems thinking is all about when it comes to finance.
Okay, that makes sense. But let's get practical for a second. Our sources keep talking about diversification and risk management, as these key strategies for navigating this whole danger zone thing. But what does that actually look like for someone listening right now? What do they need to do?
That's such an important question. Diversification and risk management, they're buzzwords, right? We hear them all the time, but they don't mean much if you don't know how to actually use them.
Exactly.
So let's start with diversification.
Okay.
The main idea is don't put all your eggs in one basket. Spread your investments across different asset classes, stocks, bonds, real estate, even some crypto if you're comfortable with that.
Don't bet it all on one horse. Got it.
Right, because you never know what's going to happen. Now, when it comes to risk management, it's all about understanding how much risk you can handle.
Okay.
Are you okay with, big swings in your portfolio? Or do you prefer a more steady, predictable approach?
Right, yeah. So figuring out your comfort level with a financial roller coaster.
Exactly. And once you know that, you can start building a portfolio that makes sense for your goals and your personality. And that will help you weather those market ups and downs.
Okay, that's helpful. But let's get even more specific. Can you give us some actual concrete tips for diversification and risk management, like something anyone listening could do today?
Sure. So for diversification, one of the simplest things you can do is invest in index funds or ETFs.
Okay.
These funds track a specific market index, like, the S&P 500, and that gives you instant diversification across a whole basket of different companies.
So you're basically spreading out your risk really efficiently.
Exactly. You don't need to be a millionaire to diversify effectively. And then for risk management, one basic strategy that anyone can use is setting stop-loss orders.
Stop-loss.
Yeah, basically, it's an order that tells your broker to automatically sell a security when it hits a certain price. So it helps you limit your potential losses.
Kind of like a safety net for your investments.
Exactly. It's a way to decide ahead of time, like, okay, if this investment drops to this price, I'm out. It takes some of the emotion out of trading.
Yeah, because we all know how emotions can get the best of us, especially when things are volatile, right?
Exactly. It's much better to have a plan in place before things get crazy. Like having a game plan before you step onto the field, right? It helps you stay focused and disciplined even when things are getting intense.
That's a great analogy. So with all of this talk about danger zones and volatility, it's not necessarily time to panic. It's time to be informed, be strategic, and maybe even embrace those opportunities that volatility can create.
Absolutely. And remember, the more you know, the better off you'll be.
True. Speaking of knowledge and powerful tools, our sources mentioned something called equity AI. What's the deal with that? What role does AI play in all of this?
Oh yeah, equity AI, that's a really interesting development. Basically, it's an investment tool that uses artificial intelligence to analyze all the market data and provide investors with insights.
Wait, AI for investing, how does that even work?
It's pretty fascinating stuff. Essentially, equity AI uses these complex algorithms to sort through massive amounts of data, like news articles, financial reports, market trends, all of that. And it's looking for patterns and signals that humans might miss.
So it's like a superpowered research assistant for your portfolio.
That's a great way to put it. It can help you spot potential opportunities, manage risk, and ultimately make more informed decisions.
But isn't that a little bit unsettling, like relying on AI to make financial decisions?
I can see why people might feel that way, but it's important to remember that tools like equity AI, they're just tools. They can give you really valuable insights, but in the end, you're the one making the decisions.
So it's not about handing over control to a robot. It's about using AI as a partner or like a really smart advisor.
Exactly. It's more like having a GPS for your investments. It can point you in the right direction, but you're still the one behind the wheel.
I like that analogy. So with all this talk of AI and ever-changing markets, it feels like we're on the edge of something big, but it also feels a little overwhelming. How can someone listening stay ahead of the curve without getting lost in all the information overload?
Yeah, it feels like there's just so much coming at us all the time, right?
It really is, you know. It's like trying to drink from a fire hose sometimes. Totally. So with all this information flying around, all these new tools and strategies, how do you even begin to cut through the noise? How do you focus on what really matters?
That's the big question, isn't it? I mean, in this world where we're constantly bombarded with information, you've got to be really careful about what you're paying attention to. You can't just chase every headline, you know? You'll get whiplash.
So it's not just about knowing the facts, it's about like deeper understanding.
Exactly. It's like, you can memorize a recipe, but that doesn't make you a chef.
Right.
You need to understand the why behind the what, the principles of cooking, the chemistry, all that. And then you can apply that knowledge to create anything. Same thing with investing, right? The market's always changing, but the fundamental principles, those stay pretty constant.
Okay, so it's about focusing on those core principles instead of just like reacting to the latest news.
Exactly. And that's what we're trying to do here, right? With these deep dives, we're trying to help people connect the dots, see those underlying trends and give them the tools to make good decisions no matter what the market's doing.
Yeah, I like that. So speaking of navigating this crazy market, we got to circle back to where we started this whole danger zone thing. It's definitely a bit unnerving, right?
Yeah, it can be.
But we've broken it down, right? We've talked about what's causing this volatility. We've looked at those anxieties that are driving those market movements. And, we've highlighted that there are still opportunities to be found.
Mm-hmm.
And we talked about that systems thinking approach, which I think is really valuable. I mean, we covered a lot of ground. Treasury yields, geopolitical stuff, the whole U.S. steel thing. We even touched on AI and investing with equity AI.
Yeah, we did. It's like, one person's danger zone is another person's buying opportunity. It really depends on how you look at it.
Totally. We also talked about, practical things that people can do, like diversifying their portfolio.
Yeah.
Using index funds and ETFs.
Yeah.
Setting stop-loss orders. Those are all actionable strategies that anyone listening can use.
Exactly. And the important thing is, don't panic. You don't have to have all the answers.
Yeah.
Just take it one step at a time, keep learning, and you'll be fine.
Right. Knowledge is power, as they say.
Mm-hmm.
So true. So on that note, we want to leave you with one final thought. That source that mentioned equity AI, would you actually use something like that? How do you feel about letting AI, help you make financial decisions? That's something to think about, because this financial landscape, it's always changing, right? So keep learning, keep asking questions, and until next time, happy investing, everyone.
Yeah, it's like we're constantly trying to catch up, right? There's always something new to learn.
It can definitely feel that way.
So how do you stay ahead of the curve? I mean, with all this information, all of these new technologies and tools, it's easy to get overwhelmed. What's your advice? Well, I think the key is to be really selective about where you're getting your information from. Focus on building a solid understanding of the fundamentals. Don't just chase the latest trends or headlines.
Right. So it's more about developing a deep understanding of how things work rather than just memorizing facts and figures.
Exactly. It's like, think about it like learning a language.
Okay.
You don't just memorize a bunch of words and phrases, right? You learn the grammar, the syntax, the structure of the language, and then you can use that knowledge to understand and create anything.
So it's about understanding the why behind the what, not just the what itself.
Exactly. And that's where resources like this, this deep dive can really help. We're trying to connect those dots, show people the bigger picture, the underlying trends, and give them the tools to navigate this ever-changing world of finance.
That makes sense. So bringing it back to where we started, all this talk about danger zones and volatility and uncertainty, it can be a bit scary, right?
It can be, but it's important to remember that markets are always going to fluctuate.
Right.
That's just the nature of things.
So what have we learned today? We explored those anxieties driving the market. We unpacked why things feel so shaky right now.
Yeah.
And we also highlighted those potential opportunities that come with volatility.
Absolutely. Risk and reward, two sides of the same coin.
Exactly. And we talked about the importance of systems thinking, right? Understanding how everything is connected. We covered a lot of ground, from Treasury yields and geopolitical tensions to the U.S. steel situation, and even AI-powered investing with equity AI.
And we even gave some practical advice, right? Like how to diversify your portfolio using index funds and ETFs, and how to set stop-loss orders to manage your risk.
Yeah. Those are things that anyone listening can actually do. So the key takeaway here, I think, is that even when things feel uncertain, knowledge is power.
Couldn't agree more.
And that's what we're all about here, right? Helping people understand the forces at play so they can make informed decisions.
Absolutely. That's the mission.
So on that note, we want to leave you with one final thought. Remember that source we talked about, the one mentioning equity AI? Would you actually use a tool like that? How do you feel about AI helping you make financial decisions? It's a big question, right? Something to think about as you continue navigating this ever-evolving world of finance. So keep learning, stay curious, and until next time, happy investing, everyone.